Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the MJ sector, so it's gotten uglier since the CGC earnings fiasco. So CGC had a big dump today on its earnings. It closed the day down 14%. After hours now, ACB was down 7% today because of CGC's correlation. And now we're down 9%, under $3 on ACB after hours. VFF dropped 20% on its initial reaction. It's starting to bounce a little bit now, but overall, everybody is still going bearish on their earnings. So that's the state of the sector right now. Despair. If you remember, maybe a week ago, I put out a video saying this is the most important earnings to date for me personally, where I'm not as concerned with fundamentals as most people are, but with where the charts lined up and how the base of support was trying to be established, knowing that these earnings were either going to be the short-term relief to get a follow-through move off of that base, or just reiterate the bears' confidence and the despair in the sector with another leg down. And to be completely honest, it could not have gone any worse for the bulls with this current earnings season. And that's just in response to everybody's earnings. It's not like we have some up and some down. We've got everybody responding bearish, aside from APHA, who reported weeks ago. So everything is weak right now. I did trade the CGC bounce today. I flipped it a couple times, no real big gains or anything like that. I am going to be I am in a quarter position still that I did hold overnight because I'm looking to build a longer term position, just looking for a daily bounce at this point. And I still have 3 positions that I'm willing to fill. So if we drop down under $15, I will continue to add there. Today, the confidence was derived from the 4-hour RSI being at historical bounce levels. Again, you go back and look at the 4-hour RSI in the history of CGC, where does it bounce from? And some of the most extreme levels that it gets to were 17 or 18, and this morning we were down at 17 and 18. So that was a little bit of a confidence boost to be buying on the initial dip today. We can absolutely see another leg down. The hourly bounce was from 15.19 just over 16. That's just an hourly lower high. Tomorrow we have to hold 15.19 and break 16.05 to change the hourly trend and see that bounce gets follow through. We're down after hours right now thanks to the ACB and VFF reactions, which again were significantly bearish at this point. So if you've been watching these videos, you know that I played oversold bounces on CGC multiple times in the last couple months. And I think I've gone 3 for 3 playing those bounces and coming away with profit. But what I've been doing is locking in that profit, going to a fresh clean slate, and then moving on from there. At this point in the sector, I personally am going to start shifting my game plan to playing oversold bounces as I have in the past, but rather than locking in my profit, I'm going to look to position myself in low risk or break even positions to be looking for the bottom, essentially. Do I think the bottom is coming in the near term? Potentially. We still have the December, end of year potential tax selling that may need to be a final push down, but I do believe we're getting close. Why do I believe we're getting close? Obviously, we reach a point, again, we're looking for a point where the scales tilt, where everybody that's long that was going to sell has sold, everybody that was going to short has already shorted, and then the scales flip. And that could be happening. That's something I'm going to be watching to happen now that we've got this new leg down for some time in the next couple of months. So if you're not used to playing oversold bounces and if you don't have experience, you're not going to be taking the same kind of style of trading that I am going to be doing. But that's personally where I stand. And another reason, again, I keep making the comparison to Bitcoin. Some of you don't like that because you say it's completely different because we've got assets and tangibles and all that. I can understand your argument. For me, it's not different. It's just an emotional cycle with new traders and investors that are not seasoned in the space. Jumping in, hype, euphoria, speculation, it's all the same. Human emotion does not change over time. And Bitcoin, from its all-time high to its low, pulled back 84% in a span of 52 weeks. CGC, with where we stand today, in 56 weeks has pulled back 74%. So it's very comparable as far as the hype and euphoria and the amount of a pullback we've seen since that top has been hit. That's another reason I'm starting to keep an eye out. And again, it's just a strategy. What I'm looking to do, let me just give an example. Let's just keep it simple. Let's say I entered at $16 and $15. My average is $15.50. We bounce back to $16. I sell half of my position at a 50-cent gain, and then I put my stop loss under $15 at break even. And that's something that I'm going to attempt to do while we're in this pullback. If we see a bottom found, we bounce and set a daily lower high, drop to a lower low, I get stopped out for break even or a small loss, back to a fresh clean slate to try again. I am more than willing to do that multiple times, knowing that eventually we will see a bottom and we will see a bounce. And I do believe that the bounce in the sector will be a solid 50 to 100% bounce over a decent period of time. But I'm starting to watch for the capitulation bottom now that we're seeing such brutal reactions to these current earnings after already being in a brutal, 6-month, 7-month downtrend at this point. And all you got to do is pull up the monthly chart for CGC and see that it is just in free fall at this point. The sector is not going to die and go away. The sector has a ton of work to do, absolutely. What was notable for me is the US sector. There's a lot of green out there today. Curaleaf up 4%, CWeb up 3%, IAN up 2%, MedMen just above break even. Let's see, OH and CL were down the most on my screen that I'm watching in the USMJ space. But the takeaway is USMJ space is pretty pleased with where we stand right now in the bloodshed that's going on in the Canadian side of the sector. And there's many reasons for that. Number one, maybe the market is determining that this weakness is specific to Canada and Canadian companies. Number two, maybe the fact that USMJ names have already pulled back comparable percentages, 70+% from their all-time highs. Maybe we're now just getting in line with the weakness in the Canadian MJ space to be comparable to that. Another reason could be the US market is a bigger size and people have more hope. Whatever the reason is, it was a distinct difference in Canada versus the US today with how they traded. And I'm going to be curious to see how that is moving forward. We will have earnings in other USMJ names moving forward, something to keep an eye on as well. But bottom line, we're still in the same despair. Yes, everybody's looking bearish and it's been right. Psychologically speaking, this is a game. You've heard me say that 100 times. And we need to treat it like a game. If you're the kind of person that is taking the victim role in this and pointing to manipulation and short selling tactics or whatever that you're hinging on to keep from pointing the finger at yourself, this isn't my fault that I'm in a red position in a long-term holding and that it's getting ugly and it's day after day brutal. It's the market makers. It's the short sellers. That, in my opinion, is a detrimental psychological state to be in. You're going to be negatively impacting yourself, and you're going to be negatively impacting those around you. It's the kind of thing where we treat it like sports. If you lose in ping pong or baseball or football, you shake the opponent's hand and you say, good game. So right now, if you are bullish this sector, you got to give it to the Bears. They have been killing it. Anybody that's been bearish in the last 5 months has been dead on correct, and they are reaping their rewards. Bulls reaped their rewards 2017 through 2018, and 2019 is the year of the bear, and it is their turn to reap the rewards. Congratulations to the Bears. If you've been making money on this pullback, that's well-deserved. Good for you. So I am looking for a shift. But again, I've been looking for a shift for a while. Doesn't mean I'm just buying and hoping the shift happens. It means I'm positioning myself in low-risk setups where I will either stop out or be right. And I'm just fine doing that. So heading into tomorrow, knowing that I have a quarter position that closed the day just above break even. If we see a lower open, if we drop to a lower low, I will not add anything unless we break $15. Break $15, I will add another position. And again, with a maximum of 4 positions, I've already established my trade game plan of what I am willing to risk, what I'm willing to put in. And I will be looking for a bounce for a daily lower high to form sometime in the next couple of days, keeping in mind that, we're going to get the downgrades coming out tomorrow. We're going to get the ambulance chasers, which are the firms talking about litigation of deceitful tactics by the companies against shareholders, whatever. Those are to be ignored in my opinion. But after that dust settles, we'll reach the point where just in this little micro window, everybody that's going to sell will have sold, everybody that's going to short will have gone short, and we will see a bounce to form a daily lower high. The previous times that I've done this play recently, I definitely did it here and might have done a little small one in there and then did it here as well. So looking for something similar, just a few day green bounce once the bottom is hit and the scales tilt. That's what I'm looking for. So hourly time frame is going to be our guide. And again, 1519 to 1605 is the range to be watching on CGC. APHA had the best dip buying today and closed down 1% where everybody else was down 4, 7, 6, 14. So APHA, nice dip buying, 423 support did break. So we're now looking down at $4, and then we're looking down at the short report level of 375. So $4 and 375, well, I guess 408, $4 and 375 are our supports. Looking at the hourly time frame, did we change the trend? No, we're down after hours in the 420s right now, seeing that reaction to the sector. And we've got our low, high, and we're looking for a higher low. Bulls have to hold 408 and break 445 to change the hourly trend. And if we break 408, we will see another leg down. There was a brief opportunity to capitalize. ACB released their earnings on their website before the press release came out, and we still had CGC trading after hours just above its ask in the 1586-88 range, and there was a solid 3 minutes that allowed you to potentially sell, and here we are trading 2% lower, less than that, maybe 1.5% lower, but always nice to see those little opportunities where humans can capitalize on a lag time in between information being disseminated to the masses. So, ACB, gap down extremely likely coming. There's our lower high and lower low. We are under $3 at the moment. Where does that put us? The weekly time frame, bear flag confirmed, and we are back to where we were a long time ago. The week of November 2017. 2 years back in time, here we are. And there's a lack of support. After $3, we're looking down at $2.52. And you can see no support was established. Essentially, we can look at some previous resistance levels as support, but once we broke out here, very little support was established. And we will look for a dump tomorrow morning. We'll look for a bounce, and we'll look for that bounce to give us an hourly lower high compared to 330. Cron. So Cron's already had a few days of a bearish reaction since earnings, so it's worth keeping an eye out for a bounce here as well. It's still reacting with the sector, but again, we will reach that point short term, just looking for a bounce for a daily lower high to form, but we're going to reach that point short term, in my opinion, within the next couple of days, where again, everybody that's going to go bearish will have already done so, all the longs will have already sold, and we'll look for that bounce to begin. Hourly time frame, 665 is the low, high of the bounce was 699, we'll call it 7. And if we break 665, another leg down, and we're looking at 6 psychological as the next level, 650 actually. 650 is the next level for Cron. And again, that's going back, and that will be the lowest price that we've seen in over a year. TLRY, all-time lows. Who would have thought? 300 back to all-time lows? I wouldn't have thought so. Definitely knew it was going to come down to earth, but that is pretty insane. And we're looking at psychological levels because it's in black dirt breakdown with no support in sight. $19 support. Hourly resistance is the top of the bounce at $20.29. Hexo broke $2 more convincingly, dropping down to a lower low after hours, testing the low of 180. So again, every individual name, low of today is support, high of the bounce is resistance, 191 resistance, 180 is support. If we see a break in Hexo of 180, we're looking down at 153, 158. OGI. So OGI bounced here, not as much of a pullback after hours, 229 support, resistance of 257, and we have to see 229 hold and 257 break to change the hourly trend for those bulls. And labs, more follow through now for the bears. Again, we're still keeping the possibility of this inverse head and shoulders on the weekly, but the bulls need to start to form this right shoulder soon to try and form the higher low compared to 310 and then see a break of resistance. Hourly time frame, anything under 423 is just an hourly lower high as the clear downtrend continues. And VFF, there was an opportunity after hours. It's thinly traded. You can see we flushed down to 523. And here we are trading 10% above that level. I doubt any significant amount of shares was filled down there. And you can see that candle was only $65,000. So gap down open is coming on VFF. Weekly time frame, lower high and lower low. And we're now going to be looking down at the next level of 622. And if we open below that, 577 and 5 psychological. Bears in complete control of this sector. So again, if you're bag holding at this point, probably just hoping for break even. And that's why things are going to be so hard to get. It all obviously depends on where you're holding from, but that's why it's so hard to make its way back up after a move down like this, because let's just look at CGC as the example. You know that there are bag holders at every single level from the past 6+ months. So if you see a 10% bull move, you know that there's people from back here waiting to exit break even. So that definitely makes it a more difficult road ahead for any kind of recovery, but we will have weekly uptrends in this sector again. And we're just patiently waiting for when that's the case. If you are not comfortable as a trader and with oversold bounces as I am, you're waiting for a weekly trend change. The weekly trend change in 2017 is when we got interested in the sector again. And obviously we're not going to be looking for anything like that again in this sector, but the weekly trend change will be a marked shift in sentiment, and that will definitely be our temporary bottom at that point once that takes place. So if you are not a confident trader, watch for the weekly trend change, watch to get over the weekly exponential resistances. That will be the marked bottom. One more point on Bitcoin. When it did reach its bottom, it traded straight across on the weekly time frame for a couple months, built a base of support, and then went 300% back up in its retracement. I'm not expecting 300%, but it's worth noting that it doesn't necessarily have to be a capitulation, flush, and then V-shaped bounce. We could see choppy sideways action, build a base for a couple months, and then see the trend change, and then look for our 50 to 100% move. So that's where we stand in the Canadian MJ space. Now to US MJ. TRUL still pulling back, trying to find the bulls dip here. We are looking for a daily lower high compared to 1523. Earnings are coming early next week, and we have the hourly trend needing to change for a daily higher low to be set. We have to see the bulls hold 1291 and break wherever we top out to change that hourly trend to give us the bounce underway on the daily time frame, but we already have pulled back a fairly significant amount from that high. Cura, solid day today, continuing to make its way back from 2 days ago, which was a very disappointing close, but we're looking back up at that high of 730 and our key resistance of 740. Almost wondering if we're seeing money leave the Canadian MJ space to head to the US MJ space. Not enough, 1 day is not enough for us to say that by any means, but we're going to keep an eye on things over the next couple weeks and see if people are more interested in the US than they are in Canada. Obviously, the biggest restriction in the US right now is access to capital of these companies, and the longer it takes to get that access to capital, the more detrimental it's going to be to shareholders with dilution and things like that. CWeb got its bounce going after its earnings reaction. Anything under 1533 is a daily lower high, but we did see a nice shift. Still need the hourly trend change. Again, if we do not change the hourly trend, we have no pressure put on bears. We see no buying of the dip for higher lows by bulls. That's the most important thing in the sector. IAN is trying to hold 152. Little green day today. Anything under 197 is just a daily lower high. CL was weak today. So CL has now a triple top, very clear resistance line, and we are pulling back and losing supports. So the weekly time frame is heading back down to our low of 667, and if 667 breaks, we're then looking down at the all-time low, and OH is being dragged down with it. Still watching for OH to try and hold 363, but if CL keeps dropping and drops to a weekly lower low, that's going to hurt OH as well. OH has to hold 363, change its hourly trend to set a daily higher low, and then try and bounce where we would look for a lower high compared to 550 from there. GTII, bulls buying the dip, not really a whole lot going on, but holding on within the range of the last few days. And Harv, bulls trying to buy that dip as well. Anything above 295 is a daily higher low. Bulls need follow through to continue this resistance break and get over 394 resistance. So, despair in the sector. Honestly, if you're cash, the uglier it gets, the better it gets. the more we drop before we find a bottom, the bigger the gains are going to be on that initial bounce from the bottom. It's the same thing where if we stair step down on a drop on any time frame, I am less inclined to play the bounce than if we are waterfall dropping. Because when you waterfall drop, it is much easier. If you're stair stepping down, you're building resistance levels, and when you're going back up, you have to fight those resistance levels on the way back up. When you free fall, you clear out the order book of buys and sells, and then the bounce can be more V-shaped because of that. So I like it, the uglier the better, but that's again only because I'm cash and I'm well aware that it's easy for me to say not holding a big red bag in the sector to have a positive mindset and not talk about negativity, but just know that I have held my fair share of bags in penny stock world before learning my lesson. For a lot of people, this sector is going to teach them lessons. And honestly, it's just the biggest lesson and takeaway for me in the last few years with both crypto and the MJ space is that this is not your grandpappy's stock market where you buy and hold and you just slowly accumulate wealth. This market with retail traders participating at way bigger levels than they ever did in the past decades, with high frequency trading running the show, we see way more significant swings with emotion way more significantly involved. And in my opinion, obviously from these two sector examples, buying and holding is absolutely not the way to trade these sectors. So it's something that I'm taking with me. Maybe the buy and hold sentiment in the stock market that's been the case for the last 100 years, maybe we're going to see that continue to shift away from there in the next 20 years. We have no idea what the market and technology is going to look like over the next couple of decades, but we have to keep our minds open that things are going to change. And being nimble so far in the past few years has proven to be a very skill, a very valuable skill. I appreciate you watching. We'll be here as always. We're not going anywhere. Have a good night.